If you want to catch sniper level trades, it starts with a top-down analysis approach. In this video, I'll show you how to master top-down analysis and go from the higher time frames and all the way to the lower time frames to show you how we catch the sniper entries. I'm Wendell from Spektrades, and without further ado, let's get straight into this video. Let's get into the top-down entry system. The first thing I do is get my higher time frame bias. I usually start from the daily or the 4-hour time frames. If it's a new week, I will use the weekly time frames. But if it's a new month, then I will include the monthly time frames. But every single day, I just go on the daily or the 4-hour and start there for my top-down analysis. I use this higher time frame bias to identify the trend/key point of interest, such as the order blocks, the fair value gaps, and the breakers or mitigation blocks, right? Just higher time frame PD arrays where I'm looking for price to pull into so that I can scale down to the lower time frames to see these models playing out. And also I use the DXY or correlated assets to support this bias, right? My correlated asset, since I trade NAS 100, is the XPS 500, right? The XPS 500 ES, right? That right there correlates with NAS 100, and I use it in conjunction with the DXY to support my higher time frame bias. And then I look for a clean draw on liquidities, right? My clean draw on liquidities are usually always the previous day highs or the previous day lows, or previous session highs or previous session lows, or fair value gaps. Fair value gaps or a big draw on liquidity point, because price will always pull and fill in a fair value gap. So if you catch a trade inside of a higher time frame order block, you could use a fair value gap as your external point of liquidity, right? Your external targets where price will draw, where price will most likely draw into. The second thing I do in this top-down entry system is my medium time frame refinements. I scale down on the 1-hour / the 15 minutes time frames, right? And I usually add the 30 minutes or the 45 minutes, right? Those are key time frames as well. But I use this medium time frame refinement to spot intermediate structure, right? Like, is price expanding or contracting? And I use it also to confirm potential inducement zones near the higher time frame point of interest, right? My order blocks, my fair value gaps, and my breakers. And I also use it to watch for liquidity pools and false breaks forming, right? On the medium time frames, on the 15 minutes, right? This is where you can see the consolidation ranges as clear as day, right? You will see the price consolidating or inducement zones, right? I usually find those on the 1-hour or the 15 minutes time frames. Then on the lower time frames, right? For number 3 is that I scale down to get my lower time frame confirmation from the 5 minutes to the 1 minute time frame. This is the final step. When you get to the model part, this is the final step to the top-down analysis. I wait for price to hit my refined point of interest, right? Either a 4-hour or a daily order block, fair value gap or breaker. Then I look for a liquidity sweep in a break of structure / a change of character, right, inside of that higher time frame zone. Then I look for a fair value gap entry or a order block or a breaker or a mitigation or a IPA. I have videos on all of the concepts also, so go to my playlist section and go to the smart money concept playlist, and you're gonna see all the videos on all the PD arrays. And then for number 3 is that I keep my stop losses ultra tight below the structure, not just random wicks, right? I always place my stop loss below the candlestick wicks, right? Just so I can be safe, right? Or at a strong low or a strong high, depending on the setup. And then a key principle, the higher time frame bias shows us the medium time frame setups, and then the lower time frames, they give us our entries. So we use the higher time frames to gauge the bias, where is price more willing to go, right? And then on the medium time frames, on the 1-hour and the 15 minutes, this is where we find our setups, right? And then on the lower time frames, the 5 minutes to the 1 minute, is where we scale down on the lower time frames to find the beautiful entries. Let's go over this model right here, right? We see price push down lower and tap inside of a higher time frame zone. These models always happen inside of a higher time frame zone. So once price taps inside of your higher time frame order block, the fair value gap or your breaker, then you will scale down to the 5 minutes or the 1 minute. This is on the 5 minutes. So after price cleared this old liquidity low and pushed up higher and give us a market structure shift inside of our higher time frame zone, we see price pull back but give us this inducement liquidity low. near this 5-minute order block. This trade was pretty simple, right? All you got to do is just place your trade at the order block open, your stop loss at the candlestick wicks, and I'm targeting prior old highs right here. But to target, right, to find these beautiful models, you have to do your higher time frame bias, right? Like this right here, this model, it's well aligned with the lower time frame confirmation. But guess what? We started from number 1 first. From number 1, number 2, number 3, then this lead to this right here, right? You see we did from the higher time frame, the medium time frame, and then the lower time frame led to this lower time frame trade right here. Let's go over the 3-box sniper checklist before you enter your trades. Let's go for number 1, the context box. Do I have a real reason to take this trade? Always ask yourself these things, right? Is the daily, the 4-hour point of interest aligned with the bias, right? Like, is price actually selling and you're trying to buy? Is price actually buying and you're trying to sell, right? Always find context first before you just scale down looking for entries. The second thing is liquidity present? Do we have equal highs or equal lows? Do we have inducements? Do we have consolidation ranges? Do we have any point of liquidity, like a sideways pattern liquidity? I have videos on liquidity also, so make sure you check those videos out. But is there any liquidity present near the higher time frame zones? The third thing we check is the no conflicting narrative. Do we have news events? Is there opposite higher time frame structure that's showing us that price may likely go on the opposite sides, right? Is there anything that may conflict our bias, right? This right here is what we check in the context box. I always check this when I'm checking when I'm doing my top line analysis. I always ask myself these questions like is there anything that may go wrong, right? Is there things that that may not align with this bias, with this higher time frame bias? You always ask yourself these things to just gain more context. The second thing is our confirmation box. Is the market reacting correctly, right? Did price sweep liquidity? That's the first thing I always check for when price comes inside of my higher time frame zone. Did we get a liquidity sweep inside of the zone, right? Did it give us a change of character or a break of structure, or just like I stated, a market structure shift on the 5 minutes or the 1 minutes, right? Like, did we get a lower time frame market structure shift inside of that higher time frame zone? And also, was a refined fair value gap or a order block or a breaker created after that shift? As you can see right here, price left this breaker that's aligned with this fair value gap after our market structure shift. This is where we will take our confirmation entry trade right here. The third thing is the execution box. Is my risk justified? Is this a sniper, right? Sniper setups usually always have a tight stop loss and you have a clear target. As you can see right here, I have a tight stop loss. My stop loss is right above this candlestick wick. And I have a clear target. Where am I targeting? The sell side liquidity lows, right? So this right here justifies the first point. Is my RR good, right? Like, for me personally, I usually target or like a 122 or a 123R. That's for me personally. A 122 or a 123R. But if I'm trading NASDAQ, right, I always go for at least 100 points, right? I know if I get my 100 points, I'm gonna make the profits that I want to make for that day. And then another clue is that, is this repeatable and not emotional, right? Is this a trade that I can see happen again? Or am I just in a mindset to just make money, right? If it's just you in a mindset of just making money, then that trade will most likely always fail, right? But if it's a repeatable trade, right, that you can see this model happen over and over again, most likely, right, not all the time, but most likely price will give you that reaction that you're looking for. If any of these boxes fail, right, if you see none of these, right, if we have conflicting news events, right, conflicting narratives, no liquidity is present, price did not give you a liquidity sweep, if none of these boxes, right, fails, right, if all of these boxes fail, just guess what? No trade. Just sit down and wait. Like, trading is more about capital preservation than more of just execution, right? This is just another simple model right here, right? Price went higher, clear this old high, to then push down lower and give us this market structure shift. Then left these two internal range liquidity points, right, near this breaker, right? On that pullback, we just placed our trade at the breaker open, your stop loss at the candlestick high, and I'm targeting the prior sell side lows right here, right? This is just what we call a market maker sell model. These models, right, we have a lot of different models. We have the inducement model, the market maker sell model, but these models are just lower time frame patterns, right, that we see happen inside of our higher time frame zones. But if you never do a top down analysis, if you never go from the higher time frames to the lower time frames, you will never see these happen on the markets, right? You will never get to experience catching sniper entries and seeing this happen so clear. I hope you're getting a lot of value from this video so far. Let's hop right on the charts and go over live chart examples of me going from the higher time frames all the way down to the lower time frames and show you exactly how we do our top down analysis. Now I'll be looking over NZD/USD. Just like I stated, I'm gonna start on the daily time frames and then scale down all the way down to the 15 minutes time frames to find my setup, and then I'm gonna scale down even lower to the 5 to 1 minute time frames just so I can get my sniper entry, right? But the first thing we have to do is understanding our higher time frame bias. Like, what is price showing us? All right, first we see that on the daily, price push down lower to clear these old lows right here. So the first thing we see on the daily time frames is price push down lower to clear these old lows to then extend higher and give us this market structure shift. Right now we're playing inside of this new dealing range from these old lows to these old highs right here. Now on the daily time frames, right, what can we see? We see price pull back and mitigate this daily fair value gap. As you can see right here, this daily fair value gap, and this daily fair value gap is aligned with this broken old high. This makes this zone a high probable zone. Now I can zoom in a little bit more, right? I'm gonna zoom in a little bit more. Now we have our daily fair value gap zone that I'm looking at, right? This is where price came into, and now we're getting our lower time frame reaction. Now let's get out on the 4 hour and on the 1 hour and the 15 minutes just so we can do more refinements. Now I'm on the 4 hour time frames, right? We see price push down lower and mitigate this daily fair value gap, give us a liquidity sweep on the 4 hour to then extend higher and give us a break of structure. Now price was playing inside of this new dealing range from these old lows to this old high right here. And now on the 4 hour, right, what can we see? Right, we can minimize this even lower, right? We see that price push down and mitigate this 4 hour fair value gap, right? All I'm doing is just finding higher time frame zones and then scaling down to minimize them. So once price mitigates this 4 hour zone, I'm gonna scale down even lower now. Now I'm gonna go down on the 1 hour and the 15 minutes time frames to see even more price action. And now that I'm on the 1 hour time frames, right? We see price push down, mitigate the 4 hour FVG to then push up higher and give us this internal range structure break, which is our market structure shift or the change of character, right? Then we see that price push down even lower once more to mitigate this 1 hour zone, this 1 hour order block. I'm just gonna grab this whole both candlesticks right here, or you can just minimize it to this one order block, but I'm just gonna grab this whole demand zone. Now we have our final higher time frame demand zone. This is where our new leg is playing from this old low to this old high right here. But you can see, right, how we started from the daily, right? We find our higher time frame range, and then we scale down to the 4 hour to minimize the zone even more. Now we scale down on the 1 hour. Now we have this 1 hour zone to play from. Now let's get down to the 15 minute time frames to find our setup. The 15 minute time frames, as you can see, price reacted from this 1 hour order block zone right here, right? This is where this reaction came from. This 1 hour order block zone, 1 hour OB. And then price started giving us consistent higher time frame breakup structures. We see price started giving us higher lows, higher highs, higher lows, higher highs, and higher lows. This right here clarifies that we are now in this uptrend. Then price extended higher to give us this higher time frame 1 hour breakup structure. So now we have this new dealing range we're playing from, right? But you may be like, what zones can we look for, right? Like just in case, right? Like, let's just look at this right here. We have this fair value gap, but this already been mitigated, right? We have this second fair value gap, as you can see right here. This could be a possible zone. Then we have this third fair value gap, as you can see right here. Then we have this small order block that's price violated. You may be like, what zone can we use, Spec? What zone may we may use? For me personally, for me to find like a clear zone, I usually look on multiple time frames. I usually look for look on the 30 minutes time frames or the 45 minutes like I stated. All right, let's scale up to the 30 minutes. On the 30 minutes time frames, as you can see right here, this left a beautiful order block. You may be like, what about this fair value gap? Price kind of already mitigated this fair value gap right here, right? It kind of already mitigated. I'm gonna put this in orange. We already used it already. But we can see that this order block, right? I'm just gonna grab the whole range in this this broken old high right here, right? The old high was mitigated, but the fair value gap, I would say, wasn't really too mitigated. I'm gonna grab I'm gonna grab the order block in the IPA fully, right? Just this zone right here, because right, I always look for the zone that's near the liquidity, right? We see price pushed up, pushed back lower, but it failed to mitigate. Right, it failed to mitigate this 30-minute order block right here. It failed to mitigate in this IPA, right? I have videos on both of these concepts. So we see price is just pushing down, right? Price first mitigate this daily fair value gap on the 4 hour, and then on the 4 hour, price let this 4 hour fair value gap. On the 1 hour, it mitigated this right here to then extend higher to give us a new leg. And now on the 15 minutes, right, price had pushed down lower to mitigate this 1 hour order block, right? It's now extending a little higher. Price pull back, mitigate this order block, this 30-minute order block already, to then extend higher once more. Price pulled back again, mitigated this 30-minute breaker. Price extended higher once more, but it failed to give us this breaker structure, but instead give us a slight pullback. And after that slight pullback, then price extended higher to give us that full body breaker structure, right? So right after this full body breaker structure, our inducement is right below here, right? Always look for the inducement right below these. Like why did price even reverse here, right? Why didn't it price push down lower to mitigate this order block to then extend? Ask yourself these questions. So this right here is my 15-minute setup, right? I'm just gonna scale back down to the 15 minutes. So this is my 30-minute order block, 30-minute OB, right? And me personally, I only trade the New York session, and that's between 7 a.m. to 4 p.m., right? It's usually the New York kill zone is from 7 to 12 p.m., right? But for me personally, if you want to trade like the whole session, right? The whole session is from 7 to around 4 p.m. EST, right? So this right here is my 30-minute setup, right? Is my setup. So I want to see for price to pull down inside of this zone right here and mitigate this zone. Then, all right, I'm gonna scale down on the 5 minutes to the 1 minute to refine that and find that sniper entry. So let's play price and see exactly when price pushed down inside. We see price finally, right? After price consolidated right here, price finally pushed down lower to clear this old low and now mitigated my 30-minute order block. This is where it gets exciting, right? This is where it gets exciting to find these sniper precision trades. All during the New York kill zone. Me personally, I only trade the New York kill zone, so I only look for this happen during the New York kill zone. Now let's go down to the 5 minutes or the 3 or the 1 minute time frames to see even more price action. It's super easy to take these trades, right? It's like, don't ever make it complicated. Just always make it mechanical and just better structured, right? So first thing, just like I stated, is that I want to see price come inside of a higher time frame zone. This is the 30-minute order block. I'm now on the 3 minutes, right? Between 5 minutes to the 3 minutes to the 1 minute time frames, that's where you're gonna see it, just more price action where the model is gonna look more clear, right? So for this case right here, this is our ICT 2022 model forming, right? Where price gave us a liquidity sweep inside of a higher time frame zone. That's number one. Then price rallies higher and give us this market structure shift right here. And after this market structure shift, look at the time, right? Look at the time displaying around during the New York kill zone. And after this market structure shift, the first entry, right, for the ICT 2022 model is this right here, this fair value gap. Or you can just use this breaker, right? Me personally, I love the breaker, right? The body of that candlestick. So I'm gonna align it with this right here. So this could be your first entry. You should just place your trade right here. Your stop loss goes right at these old lows. And where do you target, right? Remember the original consolidation ranges, right? This was the prior old highs. No prior liquidity, right? No prior high has come and taken this liquidity above here. So guess what? A lot of money is still hiding up here. Like, look at this right here. Ask yourself, like, why did price come here but not clear it out? It came close again by the pip. It didn't clear it out. It came close again by the pip. It didn't clear it out. Like, why? Like, why didn't it do all that? It's building liquidity, right? A lot of orders is hiding above here. A lot of people, like, they were anticipating the sell. Now they're getting that sell. They're hiding their stop losses up here. So now we see this beautiful lower time frame pattern happen. This is what you call a sniper entry. And it's only a sniper entry because it's so confirmed, right? We went from the higher time frames, we found a zone inside of a zone inside of a zone, to then we finally found like the proper zone. And how did we find that proper zone? We found a unmitigated zone. Like this right here was mitigated, right? This was already mitigated. This was mitigated, but this 30-minute order block, it was unmitigated and it had liquidity near it. So this right here makes this a high probable zone. So the first thing we look for is for price to come inside of that zone and give us a liquidity sweep. That's number one. The second thing inside of this zone is for a market structure shift. Price extend higher, give us this market structure shift. Now on that pullback, right? This is where we place our trade at the breaker, stop loss at these old lows. And where am I targeting, right? I'm gonna target this old high right here perfectly. All during the New York kill zone, right? I'm gonna show you exactly how we catch more entries also once price starts moving all the way. But let's play price. Now the trade is playing perfectly, right? But I want to show you how to monitor your trades, right? And if you want to place more entries, the first thing with placing more entries that you have to understand is that the mindset you have to be in. You can't be in the mindset of greed when you're placing more entries. You got to be in the mindset of just scaling in. Scaling in and greed is way different mindsets, because scaling in shows you that you have now confirmed the setup. You're just placing another contract. Greed means, oh, it's just going your way, right? And you haven't even confirmed it. You just want to make more money, right? It's just different mindsets gives you different results. But how do we confirm this trade? The first thing I do personally when I want to confirm my trades is that I wait for a second body break of structure, right? We see price came back lower, right? This was the first test, but price came back and retested once more and then rallies higher and give us this second body break of structure right here. This right here is my confirmation to enter more contracts or more lot sizes if I'm trading Forex, right? But me personally, I usually trade futures now. So I only look at NASDAQ, I'll say, or GU if I'm looking at the Forex pairs. But as you can see, after this second body break of structure, what did price do? Price pulled back and give us these inducement lows right here. These inducement lows. So if I miss this first entry, right? I miss this first entry right here. Price after these inducement lows, price left this IPA. The IPA is the 3 candlestick bar pattern that forms our fair value gap, right? We have 1 candlestick, 2 candlesticks, and 3. And right in the middle is our fair value gap. We see price already pull back and mitigate the fair value gap to then extend, but left this IPA right here, right? Like, why did price leave this IPA? So we pull back, as you can see. This right here will be my entry. I'm gonna place my entry at the IPA open. In my stop loss, use, like me personally, I will always advise you place your stop loss at the first entry low, right? Because you see price already respected this low. So this has become a strong low, right? Price already respected this low. This low respected this old low. So this has become a strong low. So you don't need to use like a bigger stop loss to stop you, right? Just this low right here is perfect. And where I'm targeting, right? I'm targeting the same prior high right here. So if I miss the first entry, right? You probably were unsure about this first entry. You didn't trust it. But later, or you came later in the session. As you can see right here, it's around 11:30 now. You came later in the session and price already moving, right? And you don't want to miss this trade. You wait for that second body break of structure, pull back, you see the inducement, then you place your second entry right here at this IPA. You see price push down lower, mitigate this IPA. Now let's see if we can extend higher. And boom, we see price extended higher to come and clear the old highs right here. But just like I stated, even if you miss this second entry, price usually gives us a total, from all the years I've been trading, every trade usually yields at least 2 or 3 great entries, right? Don't quote me on that, but 2 or 3 great entries will be present every time, right? Not every time, I'll say, but like majority of the time, 2 or 3 entries will be present. So if you miss the second entry, also, just like I stated, right, always wait for that intermediate breakup structure. As you can see right here, after this intermediate breakup structure, what zone did price use? I'm gonna let you guess. Price used this fair value gap that's aligned with this broken old high, right? This is our break-in retest. If you are like a retail trader, this should be like very easy to understand, right? It's a break, probably break through this old high. So this old resistance has become a support zone. So when price pull back, it's not gonna want to use this old order block. Like a lot of people, they want for price to come all the way back down here to mitigate this order block to then extend higher. Like, why would price be so nice to you, right? Price is never that nice. Always keep that in your mind. The market is never that nice. It will only give you the cheap profits, as you can see right here, the cheap pullbacks, right? The cheap pullbacks to me is these broken old highs, right? So once price breaks through an old high, this is going to be your third and final entry right here, right? The break in a retest entry. And stop loss always goes at a candlestick low, right? Right here, right at this candlestick low right here. Perfect. And when I'm targeting the prior highs, I'm going to target these prior old highs right here. Perfect. Clean, right? You see, we had 1 entry, 2 entries, and 3 entries, all inside of a 30-minute order block, right? This was the 30-minute setup. As you can see right here, 30-minute setup, but we scaled down on the lower time frames during the proper session to find these sniper entries that brought us all the way back to the prior old highs, right? But what did we do again, right? We started on the 1-hour time frames before, and then on the 1-hour time frames, we pulled back on the 4-hour. And then on the 4-hour, what did we do? We started on the daily time frame to understand the overall bias, right? Because the overall bias was a bullish trending bias. So we weren't looking for sales, right? We were just looking to continue the bullish trend. So once price mitigate this daily fair value gap, what is it looking more likely to do? To extend higher, to come and clear internal range highs. So when we scale down on the lower time frames, just like the old saying says, trade with the trend. So if the trend is bullish, I'm catching buys to continue that bullish trend. Well, this is it. I hope you got a lot of value out of this video. We went from the higher time frames and scaled down all the way to the lower time frames to find those sniper entries. Top-down analysis is by far one of the most important things when it comes to trading. I hope you go over this video multiple times and take notes and go on your charts and start doing your top-down analysis every single day. Make sure you like, subscribe, and comment down below any video suggestions or what you think of this video. But it's gonna be it. Spektrades out.